All right, folks, my next guest says that rotation is healthy for the market and can actually provide the path forward. I want to bring in Essex Investment Management co-CEO Nancy Prial. And Nancy, I'm going to add that you also said look forward to continued strength as new investment arenas build momentum. Elaborate on that for the audience a little bit.
So what we mean by that is that there are a lot of growth drivers in the market today. Obviously, we've been talking about AI. Everybody really knows about AI, and it is a tremendous growth driver. But there's a lot of other strength that's building and starting to emerge. One of those is the reshoring of manufacturing in this country. This has been going on for some time. It's accelerating. We're hearing announcements about new plants being opened. That drives a lot of spend, both on the construction side, on the equipment side, on robotics, and ultimately on production. We need to shore up our power grid. Everybody's been living with a lot of very hot weather, a lot of strain on the power grid. So both in terms of energy efficiency as well as the generation of energy. Then you have healthcare and housing and other areas that have really been neglected in the recent past.
So, and it's interesting, some are actually arguing that all the money that we're putting into AI means neglecting those areas. But I think that, I just think that we've got to get the right demand there. But I do want to pick up on this AI for a moment, because you say the cycle isn't over, but you are kind of worried about the parabolic moves that we've had, particularly in memory.
We are. I mean, we think that although the stocks look very inexpensive based on current earnings, we want to remember that memory isn't quite the commodity that it used to be, but we still have supply-demand cycles. Prices are very elevated, margins are very elevated. The history of industries and companies that have these kind of price swings is that they look their least expensive when margins are peaking, and therefore are their most expensive. So we don't think that the memory play is over, but we think the likelihood is that the rate of price increases is going to slow down at the very least. We actually think prices will come down as more capacity comes on. The other thing on technology, remember, technology is a disinflationary force over time. In order for this AI story to reach its full potential, we need to see that disinflationary pressure so that the productivity gains that AI is promising can really be delivered to the end customer, which was what will lead to AI being as big in the long run as people think it will be. That means we're a little more cautious on some of the most recent winners, but we want to play the people that are going to benefit from the next stage.
Let me ask you, I thought about you last week. The robot trade came to life in part because of an upgrade in Ambarella. Now, here's the thing. It exploded to 92. It's pulled back to 72. But listen, are you still long this? Because this is a name from way back that I think has huge potential as well.
Absolutely. I mean, we think right now the market is throwing the baby out with the bathwater. All of semis are getting lumped together. All of the engineering and construction plays are being lumped together. Ambarella, we believe, is that play on the next leg here. We've talked about robotics with LiDAR and machine vision. They're a play in automotive telematics, the ability to have smart cars that can have predictive diagnostics and can monitor how people drive, drones and defense spending. And then on the AI side, where Ambarella plays is in the edge AI, which we believe will be the next big wave. As memory prices come down and as these models stabilize, more and more companies will want to do their AI processing locally, and that's what edge AI is. It will reduce costs and it will also reduce latency. This will be a big beneficiary, and it's just barely beginning.
I'm with you on that. Hey, let's talk about some new ideas, because you've got a couple of names I'm sure 99% of the audience haven't heard about. Make it 100%, including me, with this Axsome Therapeutics.
Yep. So Axsome is a specialty pharmaceutical company. We are very bullish on healthcare here, both in terms of the benefits that healthcare will get from AI, the need to still develop drugs to cure diseases that haven't been curable, and frankly, the fact that we're seeing an uptick in the rate of acquisition in the industry. Axsome is about a $12 billion market cap company. They're a player in central nervous system disorders. Two of their big areas are major depressive disorders and Alzheimer's Alzheimer's agitation.
Right.
People think those two indications alone could be 6 billion. They currently are doing about 600 million in revenue. Stocks breaking into profitability. We think this is a real winner in healthcare.
It's an amazing looking chart. And those are two areas that are really extraordinarily exciting. We've been looking for help there for a long time. These healthcare stocks like this, undercover, have made huge moves. What's now Arlo Technologies? I've got a minute to go. Explain to us Arlo Technologies.
Very quickly on Arlo, smart homes, underpenetrated market, $38 billion market, about 7% penetrated. What makes Arlo particularly interesting, though, is they also have AI-enabled technology similar to the smart home technology for seniors to age in place that can monitor, that can call them, that can keep them on their medications. This could be the next big baby boomer move as baby boomers want to age in place rather than go to nursing homes.
Nancy, you have so much foresight and forethought. I really appreciate it. And let's catch up again real soon. Every time you come on, I learn something new. Thank you.
Right. Thank you. Thanks for having me.